a warm welcome. You've joined us on Buy Now, Send Now right here on ET Now. I'm Ashesha Advaryu, with me Snehi Shah, and this is a show where we take you through all the queries that you've sent. We will have market experts join us in just a bit from now to get all your queries answered. But before that, if you look at the markets, it's not turning out to be a great day for Indian markets. And Snehi, after the run-up that we saw in yesterday's trading session, Nifty is now down nearly 200 points today.
Well, absolutely big cuts coming in on the Nifty today. Morning, Ashesha, and morning to all our viewers as well. Let's take stock of what the market is up to at this point. And we're seeing a 200-point cut coming in on the Nifty, 24,600. We're barely struggling to hold on to that mark. So once again, quite close to the day's lowest point on the Nifty, 0.8% lower. Absolutely in tandem is Sensex as well, 0.8% cut coming over there as well. 80,900 thereabouts is where we are at for the Sensex. India VIX has cooled off slightly. Nifty Bank, a 0.5% cut coming in on Nifty Bank as well. And if you take a look at the Nifty gainers today, you only have 5 of the 50 stocks that are in the green right now, with 45 being in the red. Power Grid, M&M, Bajaj Finserv, Trend, Bajaj Auto and ITC, big losers coming in. ITC, of course, expecting a muted set of numbers later in the day today, which is why ITC also 1.5% lower right now. The 5 gainers in the on the Nifty front also very nominally up is Tata Steel, Bharti Airtel, Jio Financial, BEL and Adani Enterprises. That could also shift to the red any moment now. Little bit of a show of support coming in from the broader market, because while they are tanking, it's not to the extent at which the benchmarks are lower. Nifty Midcap, in fact, that sell-off has also intensified here, because Nifty Midcap is down by 0.4%. Nifty Small Cap also 0.2% lower. So Nifty Small Cap outperforming the rest of the market, but nonetheless in the red. If you take a look at what's happening sectorally, you only have media and realty that are in the green right now, and Nifty Metal absolutely on the flat line. But the biggest loser is Nifty Auto today. Negative moves coming in from FMCG, IT, Pharma, Bank, PSU banks and energy as well. But even amid a tempered market like this, you do have some names that are shining and doing very well today. Case in point being Shipping Corporation of India, almost a 10% gain coming in on that front. NTPC Green up 5%. You have Garden Reach, that's up 4% on the news of an order win coming in. Astral Limited, we just interacted with the management, a 3.5% uptick coming in on that front as well. You have PB Fintech, that's finally found its footing once again, 2.5% higher. Aster DM, Sobha, Cochin Shipyard, all of these stocks are doing very well in today's trading session. So all in all, we're seeing a tempered market today, and top losers from the broader end, Colgate is in focus, 4.5% cut. It's a miss coming in on the revenue front, while PAT and EBITDA were in line, slight beat on the margins. Mixed set from Colgate, so 4.5% lower is where that stock is. BSE continues to fall, a 4.5% fall on that front as well. Since we've just heard from Ankur a few minutes ago that SEBI is considering coming out with a new draft circular on shifting NSE's expiry, and that is affecting the BSE, which is the listed exchange. BSE down about 5% as we speak. Other than that, Emami continues to tank. You have Dixon, that's in the red. ABFRL in focus on the back of its demerger today, where Aditya Birla Lifestyle Brands is demerging. So that's ABLBL demerging from ABFRL, and the record date for the same is today, which is the reason the stock is in focus. Ashok Leyland, Mahindra & Mahindra, Ircon, all of these stocks are tanking in today's trading session. So largely that is what the breadth of the market is looking like, deep in the red. And if you even take a look at the advanced decline ratio, it's pretty even with a slight tilt towards the declines, which is why the market looks very tempered as we speak.
So that's the market setup at the moment, not looking very good as far as benchmark indices is concerned. But let's get started with all the stock queries that our viewers have started sending in. Remember, you can send us all your stock related queries. You can WhatsApp it to us on the number that's flashing for you on your screens. Across social media platforms, you are requested to put the name of the company along with the quantity that you're holding, your time horizon, your name and the city you are from, and we'll try to get them answered on the show over the course of the next 1 hour. We have market experts joining us on the show, and for now we have Sharmila Joshi, who is now joining us. Sharmila, thank you so much for taking your time out and joining us here on ET Now. And the first question has come in on CG Power. What will your take be on CG Power? The viewer has written to us, and he's a long-term investor. He's wanting to hold the stock for about 2 to 3 odd years. What will your view be on CG Power?
Overall, I'm quite optimistic on power as a sector, and within that space, at this price, I think I wouldn't advise a fresh buy in CG Power, but since you already have the shares, you could continue to hold them.
To hold CG Power is the call coming in. Sharmila, hi, morning. This is Nehi also joining in. Let's talk about the next query, and this is coming in from our viewer, Mr. Ekam Baraya, who's writing to us from Hyderabad. Stock in question is Varun Beverages. He holds 150 shares of Varun Beverages at a buy price of 625 rupees per share. So he's saying, would you recommend him booking this loss and exiting, because the stock is at 473 thereabouts, his buy price at 625, and he's asking if he should shift this entire holding to United Breweries right now. His outlook is 6 months. So what's your take when it comes to this? Should he exit Varun Beverages and invest instead in United Breweries?
So, first of all, Varun Beverages is a stock that I like at this level. Having said that, his buying price is much higher. So, definitely, I don't think that 6 months seems a little shorter, too short a period of time for it to reach that price. But if you ask me, this would be completely the wrong price to sell Varun Beverages at, because I think from a valuation perspective, it looks quite good at this level. If I compare it with United Breweries, I would still think that Varun Beverages is a better company to be holding on to from a valuation and an overall fundamental perspective. As I said, I think the only problem that I see here is the investor's buying price. But if he has the patience, I think he should continue to hold Varun Beverages.
Okay, so that's the view coming in on Varun Beverages and United Breweries. But we have Reena Thomas, who has written to us from Kerala. She's holding about 1,000 shares of IOB, Indian Overseas Bank. She had bought them at 64 rupees per share, and the stock currently trades at 38 rupees per share. So she's making considerable amount of loss on this particular holding. Indian Overseas Bank, what will your view be? And she's asking if there is any chance of getting her invested amount back anytime soon. Sharmila, what will your view be on Indian Overseas Bank?
So overall, my view on banking has turned a lot better, given the fact that we are now in a cycle where we are going to, from all indications, cut interest rates further. That said, IOB would not be my favorite stock within that space. I would definitely, prefer to be with a larger PSU bank, or even within that, a slightly larger bank than IOB. At this level, again, I think valuations are in favor of holding IOB, but my target would not be, my target would be around in that 45-48 range. So I leave it to the investor. But I think at this price, maybe you should continue to hold it for a bit.
Okay, so that's the take on IOB. Let's move on and let's talk about IDFC First Bank. Sharmila, our viewer Komal from Mumbai, is writing to us on that. She holds 209 shares of IDFC First at a buy price of 89. She's asking if she can currently add more. 89 has a buy price, 66 is where the stock is right now. Would now be a good time to average her holding?
I don't think it's a good price to average, but I think continue to hold what you have. Again, this is a bank that I do like, and but again, unfortunately, I think that the price at which the investor has bought the stock, what I've really observed in IDFC First Bank is that it's while they seem to be coming out of their old sort of legacy issues and moving to better numbers, etc. Around that 75-80 level, there is always a bit of a sell-off, and the investor's buying price is higher than that. So, honestly, my target would be closer to 80. But that said, I think that might be a good idea to continue to hold the stock for a bit.
Okay, so that's the view coming in on IDFC First Bank. But we have a retired 62-year-old senior citizen who has written to us, Venkata Ramadu. He wants to invest about 30 lakhs. He has about 30 lakhs of corpus. It's a general question, not a stock-specific question. Any long-term, fundamentally strong ideas that you would like to recommend, Sharmila?
It's a very difficult question to answer, very honestly, because I don't know what is the other portfolio that the investor has. And as you mentioned, he's a retired person. So let's assume that this is the first time the investor is making an investment in equities. In that case, I would recommend don't buy everything together. Stagger your buying. Try and buy on dips. And a very good idea, since you're a retired person, would be to have a very balanced portfolio. Where at least half your money is in good large cap stocks, and even the other half is not in it's in mid cap names, but very good quality mid cap names. I think some of the themes that I would recommend would be there should be a few defensive plays within that list. There should be some pharma representation for pharma. There should be some representation for banking, for FMCG, And then perhaps you could look to add some sectors which could be the flavor at that point in time. To my mind, it could be like a power for now, power sector. A lot of people are liking defense stocks, though honestly, I find the valuations a little high. So stagger the rest of stagger your buying, as I'm saying, and pick with good stocks within these sectors.
That's the sectors that Sharmila is liking at the moment. Sharmila, next query coming in from our viewer, Mr. Parag Visaria, who's writing to us. And the stock in question is RVNL. He has two queries. First is on RVNL. He's asking if we can add this stock right now, given that we've seen weak set of numbers coming in just yesterday and the stock has taken a little bit of a dip. Do you believe this dip would be a good time to buy? And his second query is, can he exit from Nestle and move those proceedings to Godrej Consumer? So if you had to pick between Nestle and GCPL, what would be your take?
So let's answer RVNL first. I definitely don't think that you should add at this level. If you want to add at all, I would say perhaps closer to, we have seen the stock dip to closer to sort of 300 levels. That I think from a valuation perspective is a good level to add the stock. This is a stock that I do like, but the valuations are not in favor of adding any further at this point in time. Coming to Nestle and Godrej Consumer, very honestly, for the longest time, I've been a big fan of Godrej Consumer. But what we do find is that most of the FMCG stocks are, the valuations are always on the higher side. So if I were to take a look at the valuations of both Nestle and Godrej Consumer, there's not much to choose from. That said, Nestle is also a good stock. So I don't. Maybe you could, if you're willing to be a long-term investor, I think shift to Godrej Consumer. Otherwise, just stay put in Nestle. I think from an Indian perspective, there is still room to grow there.
Okay, so that's the word coming in on Godrej Consumer, Nestle and RV.
Before we keep it going with your queries, we have an important management that's joining us on the show right now. Mr. Suresh Sethi, the MD and CEO of Protean eGov, is joining us on the show to understand the impact that we have seen from the company not qualifying for the government's PAN 2.0 project. So thank you so much for joining us and help us understand what the impact could be. We understand that you have earlier mentioned that the impact is going to be minimal, but given that the PAN segment contributes approximately 50% of your overall revenues, how do you plan to mitigate the medium to long-term risk now that you've not been shortlisted for PAN 2.0? Any outlook you could share on that front?
First of all, call out saying there is a process for PAN application and then obtaining the PAN number and the PAN card. So the PAN 2.0 RFP is completely separate from the mandate we got from ITD in 2003 for the processing and issuance of the PAN card. I just go a bit deeper into it. In the process of getting a PAN number, a citizen today has to provide their details, including their KYC details, which is the mandate we have. We collect that data, we transmit it securely to the IT department, and then IT department and their systems take the charge of allotting a PAN number, which is given back to us, and then we issue the PAN card and dispatch it. So the PAN 2.0 RFP primarily covers the tech revamp of the core IT systems, which are today run by ITD themselves. It has nothing to do with the processing and issuance of PAN cards. And that is where we wanted to clearly indicate that that RFP is not covering the mandate that we have from IT department for processing and issuance. And therefore, we see minimal impact happening on the mandate we have from ITD.
Understood. But I also wanted to understand financial impact of this news. How much growth were you penciling in from PAN 2.0, and now that it has not come through, what will the impact be on financials for the next 2 to 3 odd years?
See, any RFP that we are participating in, we don't pencil a growth upfront, because RFPs, as you know, will always be like tenders. And if you win them, you have the revenues coming in. And if you don't, then it's a 0-1 game. So we haven't factored in any revenues in our projections. Definitely, we were very keen to get into an ability to contribute to another digital public infrastructure initiative with the Income Tax Department, with whom we have long relationships in the last 22 years, and we were looking forward to it. But otherwise, our own investments in core businesses and in new businesses that we are getting into, they continue, and there is no impact as such.
Okay, and sir, you've stated that the current operations will continue under the existing PAN mandate that you have. Could you share with us the timeline for the expiry or renewal of this mandate, and what kind of revenues are you looking to log under this mandate? What's the financial impact going ahead?
Yeah, sure. So the mandate we have is a mandate we received way back in 2003. As per our engagement with ITD, this mandate gets renewed every 3 to 4 years. Currently, we have an existing mandate for another 2 years, and we continue to see it as an ongoing thing. It should not be something which gets associated with 2.0 or 2.0 going live. The 2.0, the PAN 2.0 has a timeline as indicated in the tender document of a deployment of 18 months from the time the mandate is allotted or allocated. So that's where we are. So our current mandate is continuing and it will be there.
More follow-up question on the financial impact. You did tell us that you have not projected any kind of revenue growth, but analysts clearly had, and now analysts are penciling in a decline in revenue versus their estimates earlier for FY26 and a steep decline in FY27 as well. Help us understand any other segment that you're looking to venture into now that PAN 2.0 is not happening, and will that compensate for the loss of revenue growth that probably the street was expecting?
No, so first of all, PAN 2.0 as an RFP is where I'm saying we did not pencil in any growth from that in our projections. And again, that is where the ambiguity came with the market, where we are clearly stating that our growth plans remains stable as they are. We are clearly looking at our core businesses growing, which is what we have been mentioning earlier, which includes the PAN business, the pension business in which we have a 97% market share, and the ID services business, which are our three core businesses. We are looking at new lines of business. And over here, one, we are building on top of our core foundational ID services and building a complete digitization suite for the enterprise, which includes products like eSign Pro and the aggregate API aggregation capability that we provide through Protean with RISE. So that is one line of business which we are expanding into as a new business. The second area has been a diversification into supporting multiple sectors as they create digital public infrastructure. We already have mandates in the space of agriculture, health, education, digital commerce, and transport and mobility with ONDC. So that's another vertical which is growing for us. The third, we are happy to report that clearly taking a thought leadership on the DPI front, we've launched something called DPI in a box, which is a modular way of executing digital public infrastructure on the ground. And we have had 2 wins. We've put a DPI in a box, education DPI in Morocco, and likewise we have a health mandate that we won in Ethiopia. So our international vertical is another one which will be contributing to our growth going forward. So as I mentioned, the core businesses continue to show growth and are stable, and there is no impact of this particular RFP win or loss. And likewise, the new businesses, we are on track to show whatever we have been discussing earlier, and they are on track for us.
Right, Mr. Sethi, before we let you go, just on an ending note in the con call, you said that you have reached out to the tax department for further clarity on this. Could you share if you have any update from their end?
Not as of now.
Okay. Okay, Mr. Sethi, appreciate you joining us and really appreciate your time today. Thanks so much for joining us on ET Now and helping us understand the impact of this exclusion from the PAN 2.0 government project. But on that note, viewers, let's keep it going with our queries. And on the technical front, we also now have Osho Krishnan who's joining us on the show. And well, viewers, keep writing your queries to us. And Osho, let's take this query with you first. First of all, good morning. We have a technical query coming in on KC International. I'm missing the name of the viewer, but the question is on KC International, where they have purchased the stock at a price of 700 rupees and they're asking for the expected targets in the next 12 months. They're asking if it's not looking favorable, should they switch to NTPC at the current market price? What's your take on this?
Very good morning. Firstly, thank you for inviting me at the show. Well, looking at the technical perspective of KC International, then this counter have seen a very strong correction from the zone of 1250 towards 650 odd levels, but that zone has been a very strong support in the historical period. And the buying price at 700 is a very strong point where one should actually accumulate this counter. So I would advise to stay invested in this counter. The first target that one can expect in this counter is near about 850, and breaching the zone of 850, one can even look for targets of nearly 920 to 950 from short-term perspective. So my advice will be to stay hold with the investment and look for other opportunities. And the NTPC is again also a very strong fundamentals, and it is also looking very positive to me. But from the same fund, it won't be advisable to switch from KEC to NTPC. If the person wants to invest in NTPC, I will advise to invest freshly in NTPC at current levels also.
Okay, so that's the word coming in on NTPC and KEC International. KEC, remember, has been in focus for the last several trading sessions after two back-to-back order wins that came through. But we have Poonam. She is writing to us and she has a query on TVS supply chain. She bought about 250 shares at 138 rupees per share. The stock currently is trading at about 127 odd levels. Sharmila, what will your view be on TVS supply chain?
I think at this price, once again, the stock is reasonable. It's just that we've seen a deep correction in a lot of mid-cap, small-cap names. And now we are seeing a bit of a recovery. So if you have the patience, I would say hold on a little. My target would be closer to 180.
Okay, so target closer to 180 for TVS supply chain. Osho, coming to you, next query coming in from our viewer Srujana, who's writing to us. They hold Nalco at 188 rupees per share, and 100 shares of Nalco is what they own. And they're asking what should the target be for the next 1 to 2 quarters. And they're also asking about UCO Bank. Is it looking favorable to make a fresh entry at this price? What's your take on Nalco as well as UCO Bank?
Firstly, for Nalco, this counter have started gaining some traction in the last 2 trading months. From the lows of nearly 140, the counter have surged towards the zone of 200. But again, 200 is a very strong resistance zone for this counter. So there could be some time this counter can test the patience of the investor around the zone of 195 to 200 before giving a very strong momentum in the coming future. But I would advised to stay invested in this counter from a medium term horizon. In the short term, we can see some kind of consolidation in the range of 175 to 200, 205 odd zone. But the time we see a breakout above the zone of 205, then we can see momentum coming back in this counter for a higher target of nearly 235. Now coming to UCO Bank, in this counter again, there has been very strong consolidation in this counter after the fall. The fall has been very drastic from the zone of nearly 60, and the counter has half and is trading around the zone of 30. But in the recent period, there has been a very strong consolidation, and I expect that looking at the technical front, this counter has a very strong support around the zone of 28 to 29 odd levels. While on the higher end, I am expecting a short-term target around the zone of 34 to 35. Once it breaches the zone of 34, 35, then we can review the counter whether one should hold it from a medium term perspective or one should try to exit their position in this counter.
Okay, so that's the opinion coming in on UCO Bank, but we have a lot of queries that have started pouring in and they've come in on the defense sector, in particular Cochin Shipyard. We have Suresh who has written to us from Kerala. He's holding about 50 shares of Cochin Shipyard, which were bought at 1530 rupees per share. And Rajiv Kaimal from Ahmedabad is also holding shares of Cochin Shipyard, and he's asking whether he should book profit or hold on to his positions on this particular counter. Sharmila, what will your long-term view be, especially after the run-up that we have seen in all of these defense and shipbuilding related stocks? Will it be advisable to stay put with the holding even after the run-up that we have seen?
I think so, because 2 reasons why I like the space, especially the shipbuilding space within the entire defense bit. One is that their order books are extremely strong. So that is, if you're holding for the long term, that's what you would be looking at. And also then there is some sort of suggestion that a lot more spend could be coming to the naval side of defense, and that could again benefit a stock like Cochin Shipyard. So yes, I think the stock has run up from lower levels. So from that perspective, if someone wishes to book profit, that's a different reason. But if you're a long-term investor, I think it's a good idea to stay invested.
So stay put in defense names, especially shipbuildings and the likes of Cochin Shipyard is the call coming in from Sharmila. Osho, next a query coming in from our viewer Sangeeta, who's writing to us from Pune, holds 100 shares of REC at 500 rupees per share, asking if she should continue to hold or sell right now. REC at almost 400, her price is 500. Are you seeing any sort of recovery, or should our viewer just book her losses?
See, overall, this counter fundamentally is very positive, but in the recent period, yes, no doubt the counter has facing very strong phase in the stock prices. But I would advise to stay invested in this counter from medium to long-term perspective. In the short run, yes, there is a possibility of consolidation, further consolidation in the zone of nearly 370 to approximately 410, 420 kind of a zone. But once it breaches the zone of 420 on a decisive manner, then we can see some kind of momentum coming back in the counter for a target of nearly 500, which will be the buying price for the investor. But I will advise to stay invested in this counter from medium to long term perspective. Overall, the technical structure has showcased some kind of halt in the sell off. So from here onwards, there will be gradual upside movement in the coming future for this counter.
We could see gradual upside movement on REC. That's the word coming in from Osho. But we also have Rohit, who holds about 700 shares of Hudco at the price of 281 rupees per share. And he's asking whether he should average out on his position by buying additional shares at 227 rupees per share. Osho, what will your view be on Hudco? 281 is his buying price.
See, Hudco is having a very strong resistance around the zone of 235 to 240 odd levels. So I will advise to not to accumulate or not to average the price at current levels from a longer term perspective. Rather than one should wait for the price of 240 to get crossed. Once it crosses the zone of 240, then one can definitely try to accumulate it for higher targets of nearly 320 to 330 in the short to medium term perspective. Currently, the stock is into a consolidation phase. It is having a range of nearly 220 to near about 300, 240, 250 kind of a zone. So once it reaches this consolidation level, then one can try to accumulate this from medium term time frame perspective.
Buy now, sell now right here on ET Now, and Nifty is now down nearly 220 points below that 24,600 mark. So turning out to be a weak day for Indian markets. Nifty Bank is below that 55,000 mark. But let's get going with all the stock related queries that you, our viewers, have sent for our guests. And we have a query that has come in on Tata Motors. Ashwini Bhatia has written to us from Lucknow, Uttar Pradesh. She is holding about 120 shares of Tata Motors, an average price of 690 rupees per share. Remember, the stock at one point in time last year was trading at 1150 odd level, and since then it has fallen considerably, currently trading at 715 odd levels. And it's a long term question. Sharmila, what will your advice be on Tata Motors? 690 is Ashwini's buy price.
So obviously, I think the big concern for Tata Motors has been the fact that if this the whole tariff situation, because let's not forget that at this point in time, the way Tata Motors is structured is that a lot of their earnings are also coming from their Jaguar Land Rover bit, and that is of course that exports to the US, and to they have quite a lot of sales coming from that part of the world. And if this tariff situation were to materialize, then how would that affect that portion of revenue coming from JLR to Tata Motors? So overall, if you ask me, I'm very positive on the stock. It's just that this uncertainty has added a bit of a sort of spanner in the works. So if the investor is long term in their approach, then I think stay invested, because I think that this tariff situation, we had already we were on a sort of a 90-day period, and a lot of it is now over. So how things actually fall in place for these companies going ahead will be now answered in the next quarter or so. So then let's take it from there. But if you overall look at where Tata Motors is placed and their products, etc., both domestically as well as globally, then I think it's a very strong company, and I would recommend a hold.
Hold call coming in on Tata Motors from Sharmila. Osho, coming to you. Next query coming in from our viewer Matthew, who's a senior citizen and writing to us from Kochi. He's asking what would be a good entry price for Trent. What's your view on this one?
See, for Trent, this counter has been into a very strong consolidation from approximately 2 to 3 months. There has been no positive traction in this counter, and I would advise to wait for this counter to surpass the zone of nearly 5580 or 5600 odd levels on the higher end. Then only we can see some kind of reversal or trend reversal in this counter for higher target of nearly 64 to 6500 in the short term period. Currently, the stock is into a consolidation phase. There is no negative in that, but again, it will test the patience of investor. So better to start accumulating this counter above the zone of 5580 or 5600 odd levels for immediate target of nearly 64 to 6500 zone.
You can start accumulating beyond 5,500. That's the word coming in for this particular stock. But we have Radha Krishna, who has written to us from Bengaluru. She holds about 100 shares of Titagar Rail at 970 rupees per share. She's asking if she can average 50 shares for a period of 1 year or more, and she also wants to know the target for 1 year. So Titagar Rail 900 is where it is currently. Her purchase price is 970. Osho, what will your view be on Titagar Rail?
Definitely a hold at current levels. This counter is looking very positive. There has been a trend reversal in this counter in the last 2 trading weeks. So my advice will be to hold this counter, and even one can start accumulate in this counter in a fresh manner also. The immediate target that one can expect from the short term perspective is nearly 1100, and from medium to long term perspective, I will be expecting a target of nearly 1300, 1350 kind of a zone in this counter. So overall, the technical structure has given a reversal trend for this counter, and one should stay invested from both short or even for medium term time frame.
Okay, that's the take on Titagar Rail. Sharmila, coming to you, we have our viewer Gautam, who's writing to us from Mumbai, holds 500 shares of Adani Ports at 1200 rupees. He's asking if he should sell and instead buy Voltas, AB Capital or Bharti Airtel for the next 12 to 18 months. First of all, would you recommend switching out of Adani Ports, and if so, from Voltas, AB Capital or Bharti Airtel, what would be your pick?
This is a very difficult question because I think none of the companies which are the alternatives are in the sort of same sector. So let's just take them one at a time. Adani Ports, I think we continue to hold at this level because I think the valuations are reasonable. And again, I think this was sort of impacted because of this whole India-Pakistan situation, ports being closed, etc. But I think as we see things getting back to normalcy, you should hopefully see better times for Adani Ports, and therefore that will get reflected in the stock price. I think the three stocks that were suggested as alternatives were Voltas, Aditya Birla Fashion, and which was the third? Bharti Airtel. Yeah, so Bharti Airtel for me is a long-term stock that I think you can definitely buy and continue to hold. Again, you would need to be sort of long-term because the valuations are expensive. Voltas and Aditya Birla Fashion, both are good stocks, but I would, if you had to make a switch, I think it should be Bharti Airtel.
Okay, so that's the view on Aditya Birla Capital and Bharti Airtel and several other stocks. But we have Mahesh, who has written to us from Delhi. He's a senior citizen and he's asking for our guest's view on ONGC for the long term and whether he should buy this particular stock at the current market price. Sharmila, ONGC, what will your view be on this stock?
So overall, I'm not in favor of buying anything in the oil and gas space. So I would really not recommend long-term buying ONGC.
Okay. And Osho, the same question to you on the charts. What will your view be on ONGC?
ONGC has been into a strong consolidation, so I will expect the momentum returning back in this counter once it breaches the zone of 260 on the technical front. Once it breaches the zone of 260, which is the historical resistance for the counter, and even the 200-day simple moving average, then one can expect the momentum returning back in this counter for immediate upside target of nearly 310 kind of a zone. Then again, we need to review that whether it will continue the momentum or there can be some kind of consolidation or profit booking coming back in this counter.
Okay, so that's the take on ONGC on the charts. We also have our next query that is requesting a combination view. So first we'll come to you, Sharmila, then we'll come to you, Osho. For Adani Enterprises, our viewer holds 15 shares at 2,505 rupees per share. He's Jacob writing to us from UAE. His question is first to you, Sharmila, if the stock is fundamentally sound, and then Osho, to you, his question is, will it provide a CAGR of more than 15% in the next 5 years? Sharmila, you go first.
Yeah, so this is slightly difficult question to answer because we know the kind of corporate governance issues they've had. But that said, at this point, a lot of the assets that are under Adani Enterprise also, them to be real, and the valuation is what it is because of the assets that they have and then the companies with them. And the valuations are at a reasonable price. So things did go awry for them when they planned their IPO, etc. And we've not really seen the stock go back to those 5,000 levels. That said, I think at the current price, the valuations look reasonable. You do need to keep your eye open, ears and eyes open to hear what the news flow is in the stock, because there were some concerns which still remain to be addressed. But that said, I think as I said, because the valuations at this point are reasonable, to my mind, the stock is now a hold.
Okay, so that's the take on Adani Enterprises fundamentally. But Osho, his question to you, can it be a 15% CAGR return? Can we see that on the stock for the next 5 years?
See, again, that is also a very difficult question on the technical front, but I can say the review or the technical aspect that I can predict on the technical chart. So overall, this counter is into a fair valuation, having a very strong consolidation around 24,000-25,000 kind of a zone. But on the higher end, I'm expecting that the counter can gain some kind of momentum only once it breaches the zone of 2,600, that too on a decisive and sustainable basis. But on the higher end, again, the resistance is nearby around the zone of 3,200 odd levels. So these two will be the key resistance zone for the counter, 2,600 followed by 3,200. So we need to review the counter again once it surpasses the zone of 3,200, that whether it can see some kind of further continued momentum or not. But also on the contrary, it is having a very strong support of 2,000 zone. So any breakdown below 2,000, as Sarmila ji has already said, that this counter has been into a corporate governance issue. So we need to be cautious on both the side, that whether we can see some kind of momentum coming in this counter on either of the sides. So on the higher end, 2,600, on the lower end, 2,000 is the support. Any breakdown below 2,000 can again disrupt the technical view on the short-term perspective. So I will be advising to accumulate above the zone of 2,600 for the targets of nearly 3,200. And again, we need to review after that.
Okay, so that's the view coming in on Adani Enterprises. We got a fundamental and a technical view on that one.
Welcome back to Buy Now, Sell Now. Let's take a little bit of a detour from the queries and bring you the update coming in on the geopolitical front and our bilateral relations with the US. Because after concluding his US visit, Commerce Minister Piyush Goyal is returning to India over the weekend. Sources tell us that the talks between India and US have concluded positively, and India will try to protect its sensitive sectors, including dairy and agriculture, in the trade deal, which can be finalized by the 8th of July. My colleague Sumit Chaturvedi is joining us with more exclusive details on this. Sumit, take it away.
India-US trade talks are going on a positive note, as sources tell us that very soon Piyush Goyal, or Commerce Minister, he will return to India, and the talks have gone on a very positive note. India, in a way, has sought the relief from 26% tariff, which was applied on April 2nd, but was given a 90-day reprieve, which is going to end on July 8th. However, the traders are currently paying 10% baseline tariff. India has sought relief from this 26% additional tariffs announced in April. If we talk about India's sensitive sectors like dairy products and agri-products, there could be certain quota or MIP, which is minimum import price for this sensitive sector. However, digital services could be part of the interim deal. India and US are looking forward to a bilateral trade agreement by fall of this year. Both countries, they want to take the bilateral trade to $500 billion by 2030, and talks are moving in that direction. Well, Piyush Goyal, Commerce Minister, who was on a US visit, met the representatives of US Trade and also US Commerce Secretary. The talks went on a positive note, as mentioned by him on an official Twitter account. So these are the developments when it is coming to US trade deal. India is standing on a positive or better footstep because of being the only country with which US is currently negotiating a bilateral trade agreement.
Sumit, thanks so much for joining us with all the details. So all eyes will be on some important commentary that come in on the geopolitical front. But let's shift focus back to the queries that all our viewers have started sending, and we've been discussing all through this while. We also have Anup Kumar Singh, who has written to us from West Bengal, and he has a three-part question. He has positions in 3 stocks with a 1-year horizon. One is Punjab National Bank, which were purchased at 94 rupees per share, Power Grid, and the third one is NTPC. Osho, what will your advice be on all these three stocks, PNB, Power Grid and NTPC?
See, firstly, all the three counters are from the PSC base, so I expect that in the coming future, there is a possibility for these counters to have some kind of outperformance in the market. Now, coming to the technical perspective of each and individual counter, firstly, PNB Bank, Punjab National Bank, this counter has been into a strong consolidation, but there has been some positive traction in the last 2 to 3 trading weeks. So this counter has now emerged above the short-term moving average and is now hovering around the zone of 200, a simple moving average coinciding with the psychological mark of 100. So any breakthrough above the zone of 100, 105 kind of a zone can see some kind of thrust or momentum bringing back in this counter, and then from there onwards we can expect a trend reversal in PNB from medium term perspective. So obviously one should stay invested in this counter for higher targets of approximately 125 that can be seen on technical charts as of now. Now coming to NTPC is looking very positive on the technical front because there has been some kind of consolidation followed by a buying momentum in this counter. So I'm expecting that in the coming future, once it breaches the zone of 360, this counter has a potential to test the zone of 420 in the short to medium term time frame. So again, this is also a very strong candidate for an outperformance in the coming future. Now coming to Power Grid, again, this counter, Power Grid and NTPC technically have similar kind of chart pattern. So Power Grid is also looking very positive to me. But once it breaches the zone of 320, 315 kind of scenario, then we can see potential momentum coming back in this counter for immediate targets of nearly 350. Currently, the stock is having a support around 275 to 280, where one should try to accumulate it from a medium-term time frame.
Okay, so that's the technical take coming in on all three of those stocks. Sharmila, will come to you with a slightly open-ended query coming in wherein our viewer has 2 lakh rupees that he wants to invest anywhere in the agri, energy or finance space but doesn't know which stock is fairly priced. He also says that he only wants to invest for 3 months. Slightly tricky here, but do you have any outlook on this?
No, simply because it's a 3-month horizon. So I wouldn't really want to stick my neck out. But I think, if you were to ask me within finance, you all were talking of PNB a little while earlier. To my mind, on a valuation perspective, that looks good, or even an IDFC First Bank. But these are all, long-term plays where you would, the investing period would be minimum 12 to 18 months. I think if you want a 3-month period, you should ask Osho for advice.
Right, and Osho, we'll come to you on that. It's just a 3-month outlook coming in. So anything looking good from the agri or the finance or energy space right now?
Yes, as I mentioned that from the energy pack, there are, as I already mentioned, that these counters are looking positive to me. From agriculture perspective, yes, there is a potential for majority of the counters from fertilizer space to move forward. But as of now, on the technical front, there has been a kind of a mixed view, or there has been some kind of consolidation going on in the fertilizer space. So I would advise to wait for some decisive breakout for counters like Deepak Nitrite, Chambal Fertilizer. These are looking decent on the technical front, but there has been no momentum or positive momentum in these counters for the time being. So wait for a breakout in these counters in the coming future, and then one can definitely try to look or accumulate these counters from medium term or 3 months perspective.
Okay, so that's the word coming in on Deepak Nitrite. But that's all the time we have on this edition of the show. Osho and Sharmila, thanks so much for taking your time out and joining us here on ET Now and solving all our stock related queries that had come in from our viewers. That's all the time, but stay tuned, don't go into anywhere. Markets at noon coming up next.